Hey everyone, me Kevin here. In this video, I'm going to address two things. Number one, will China burn Tesla in favor of Chinese companies like Nio, Xpeng, or Li Autos, causing Tesla to gloriously collapse in China? And number two, what will happen after Tesla is officially included in the S&P 500, and what are the dates that we need to know about and pay attention to related to that? Well, we've got some news to cover, so let's get started on these. By the way, if you want to join me in private live streams where I talk stocks, money, real estate, investing, my stock moves before I talk about them on the channel, check out the programs down below. Any of the programs that you join, you will get live stream access, and I can't wait to see you there. Take advantage of the Black Friday month sale. It ends Cyber Monday, which is tomorrow, and you can always email me for a bundle code at kevin@mekevin.com, and I'll personally help you with a bundle. Okay, first, let's understand China. It's been said, and it's commonly said, that because Tesla is a United States-based company, it is therefore foreign to China, and China will favor Li Auto, Nio, Xpeng, or any of the other Chinese EV manufacturers, there are like 15 of them, over Tesla in the electric vehicle or EV race. This makes a lot of sense, but Loop Ventures just published a really phenomenal breakdown of why we might be entirely wrong to have that belief, and instead, something much bigger might be happening. And this is why we're going to talk about this much bigger element before we talk about the S&P 500 inclusion. Here's why. The Chinese government, per Loop Ventures, wants EV companies to come to China, build in China, and export to Asia and the world from China. And this means China is actually inviting EV manufacturers like Tesla to China to bring innovation to China and then export it from China. To evidence this, Loop Ventures says, consider this just as an example. Prior to 2018, companies who wanted to manufacture cars in China would have to partner with a domestic automaker. This is why Volkswagen is 50% owner of the car manufacturing company JAC, which happens to manufacture all of Nio's EVs. But in 2018, China decided, you know what, we're gonna dump that requirement. That is, you no longer have to partner with a Chinese automotive manufacturer if you want to start an automotive factory in China. Guess what happened right afterwards? Tesla Shanghai. That's right. China basically opened the door for Tesla and probably arguably changed the rules specifically for Tesla, nudge, nudge, wink, wink, so that way Tesla would come and build Tesla Shanghai. And this makes China pretty smart. Rather than saying, you know what, foreign companies, foreign competition, we're going to make it difficult for you, China is playing a good game of 4D chess here. China thinks, and this is obviously our outside POV kind of looking in, it's kind of hard to know exactly what China thinks, but this is what Loop Ventures has put together. They say, China's POV is, why don't we invite Tesla in? In fact, let's let them run their own factory, and let's give them all of the same incentives and energy credits and tax credits that Chinese car companies get. In turn, Tesla comes and builds a massive gigafactory capable of producing 1 million vehicles in Shanghai, which sounds like it'd be beneficial only to Tesla, right? But wait a minute, what does it also mean? Tesla is now hiring and training Chinese people, teaching Chinese people the way of Tesla, the way of the world's most popular EV company, the engineering of the world's most popular EV company, the strategy of Tesla and Elon Musk. These are people, the workers, who in the future might actually leave Tesla, start their own EV companies, or lateral over to another EV manufacturer who promise maybe better pay. Kind of think about it like a price competition or price war, like Google, Apple, and Facebook competing for people in Silicon Valley. The more you compete for engineers, the more salaries and wages go up, the more workers say, oh my gosh, look how lucrative it is to work in Silicon Valley, or in this case, maybe in China, in the EV manufacturing areas. The more workers get degrees there, the more people want to go work there, the more people making good livings at these companies, the more the standard of living goes up, the more the Chinese consumption goes up, the more the Chinese GDP goes up. Basically, this is a brilliant master plan by China to, per Loop Ventures, become the, quote, Silicon Valley of EVs. Except it's not San Francisco, it's China. See, the claim here is huge. Think about this for a moment. China wants to be the hub of EV innovation. In fact, ETF provider Loop Ventures says, think of China as basically what happened in the United States over the last 15 to 20 years as the tech revolution overtook Silicon Valley. You've got crazy growth in San Francisco, the boom in Menlo Park and areas outside of and surrounding San Francisco, boom in California's, per capita income. Everything's booming in California over the last 20 years. And guess what? This signals that we could have a massive exponential growth curve starting in China instead of focusing on technology, focusing on EV tech and energy. Now, this is obviously a pretty bold claim to say that China is basically ushering in the next Silicon Valley of the next 15 to 20 years going forward. It's a pretty bold claim. But think about this for a moment. China is now taking Tesla's marketing might and one that's basically forcing an EV revolution, creating excitement over EVs. And China's basically using Tesla as the biggest Trojan horse to get Chinese people to adopt electric vehicles. And this is absolutely brilliant because think about it. China's strategy allows the Chinese Communist Party to say, hey, people, look, EVs are good. We've got Tesla in, we've got energy credits. Please buy Tesla. By the way, we've got other options for you as well. Want to try Nio? Want to try Xpeng? Want to try Li Autos? Hey, we have choice for you. See, China actually encourages Tesla's competition because the bigger Tesla becomes, the more EV vehicles get produced and the bigger the Silicon Valley of China grows. In fact, Nio, in their last earnings report, during their earnings call, their Q3 earnings call, their staff said, we encourage Tesla's competition because the bigger Tesla grows, the bigger our slice of the pie becomes. They say that the real competition isn't Tesla. Instead, it's internal combustion engines, basically regular gas cars or ICE cars. This is Nio saying that. Nio is basically reiterating what Loop Ventures is saying, that the Chinese Communist Party and other competitors like Nio are like, no, please, Tesla, come to China. You're bringing an insane attraction for EVs. You've got a massive EV market here. China's the biggest in the world. We'll talk about that in just a moment. And you're creating something that nobody else is fostering right now. Well, you think California is going to be the one that fosters the next EV revolution with how slow growth California is? I don't think so. China is literally incubating an EV revolution. In fact, estimated EV deliveries in China are 3.5 million for 2023, 5.1 million for 2025, and 13.3 million in 2035. And they believe, Loop Ventures, that by 2025, more than 1/3 of all of Tesla's deliveries could happen in China. Tesla currently maintains about a 20% market share in China, and they'll likely stay around this 20 to 25% market share. And if that's true, that means the other 14 to 15 big players in China, including Nio, Li Autos, Xpeng, and the other low-cost EV providers, are going to balloon up with Tesla to the detriment of the internal combustion engine gas cars. Just to make this clear, how important China is, in 2019, China bought 50% of the world's EVs. They're way ahead of us already. Like, this is old news to them. In 2020, people in China have already bought 30% of all of the EV sales in the world. About 1 million EVs, which, by the way, is 3 times what the United States bought year to date in 2020. Now, what's also interesting about China is the average selling price of an electric vehicle in China is actually $20,000. The cheapest EV is about $12,000, and there are rumors that there might even be a $5,000 EV coming out. These are in US dollars. Tesla sells for much more than this. The Model 3 sells for about $37,000 as an average selling price, and Nio is priced even higher at around $50,000 as an average selling price. Nio specifically targets SUVs and crossovers, which, guess what? SUVs and crossovers in China are also the most popular vehicle, accounting for 40% of all sales. And this is really setting the stage for insane demand for Tesla's Model Y in China when it finally comes around next year, once it really starts getting rolled off the production facilities. You know, Shanghai is supposed to be doing both the Model 3 and Y, but we really got to get these production numbers ramped up. And they're just in the ramping phase. We know this. And think about this. Nio knows this, and they're specifically targeting the EV and crossover market, yet invite Tesla's competition and say, no worries, the bigger the pie grows, the more sales we'll get. This is all euphoria over EVs, and it's real because consumers are switching. Now, Nio knows that they can't only sustain as an SUV and crossover manufacturer, so they do plan to announce 2 sedans in 2021. But, you know, let's keep focusing on Tesla and China here, and we'll talk about Tesla and the S&P 500 in just a moment. But, folks, in terms of Tesla China, at least for now, China loves Tesla because it's raising the standard of living of people working on this EV race. It's increasing consumption in China. It's increasing the gross domestic product for China. China is basically YOLOing on EV right now. They're basically like, let's go all in on this because we want our country to grow 10x in the next 15 years, and we think it's going to be EV that gets us there. See, this is why China could literally be the next Silicon Valley, except, again, instead of being like tech companies like Apple and Amazon, it'll be EV/tech/green companies. So this is going to be definitely to the detriment of the United States, but it's going to be a good thing for anybody, especially looking at these Chinese competitors to Tesla and Tesla. So, and then this comes despite the fact that you have a lot of companies like ARK Invest saying things like, I don't know, EV market could be something that's a winner-take-most economy, or sort of market, where basically if Tesla ends up being the dominant player, they're not going to sit around at 20-25% market share. They might take most, or more than half, 60 to 70% of the market share. We'll see. This is why you don't want to sell your Tesla shares. And if you don't yet have Tesla shares, well, let's talk about the S&P 500 in just a moment and see if we can get you an entry point. But all of this so far reiterates what we've been talking about on this channel and why you subscribe to this channel for the stock updates. And that's that Tesla is just at the beginning of their long-term growth trajectory. And Loop Ventures just destroyed the argument that China is just going to pull out the rug from under Tesla. Right now, China needs Tesla. And Tesla may also introduce a smaller vehicle in China to keep the costs down or to be more competitive against the lower cost EV manufacturers, especially as Giga Shanghai gets to scale and maybe even another Gigafactory or even Terafactory opens up. Maybe this new car will be the Tesla Model 2, or it'll be a smaller hatchback, similar to what they're planning at the Gigafactory in Berlin, Germany, where cars are generally smaller than United States cars. So all in all, this is all huge news for Tesla. It reiterates that long-run growth that we're expecting, and really, China is removing any headwind concerns. However, it is also possible that Loop Ventures could be entirely wrong. Maybe China is just trying to use Tesla as a Trojan horse, and once they slingshot with Tesla's momentum for the next few years, maybe they'll pull out the rug from under China with some new, or from under Tesla with some new rules, and then all of a sudden, Nio, Xpeng, and Li Autos are going to have a substantially strong unfair advantage. Who knows? This is also something that's on my mind at the same time as the House of Representatives in our United States Congress is voting this week to force Chinese companies to follow U.S. audit rules to be able to be listed on U.S. stock market exchanges. In other words, if the House passes this, the Senate passes this, and the President passes this, and then Chinese companies refuse United States audits, well, Nio, Xpeng, and Li Autos could all be kicked off the stock exchange, which means we don't get to trade those shares anymore. But hey, topic for a different video. Instead, right now, let's focus on the S&P 500. So here's a scoop. Monday, November 30th at 5:15 p.m. Eastern Time, the S&P 500 will announce how Tesla will be incorporated into the S&P 500. And so here's the rumor roundup on that. Number one, Tesla will be fully included in the S&P 500 by December 21st. That's rumor number one. Rumor number two is Tesla will be fully included in the S&P 500 in 2 batches, once on December 14th and once on December 21st. Rumor number three is Tesla will be fully included on December 18th, also known as Quadruple Witching Day, when basically a ton of options expire and the market should be really volatile. But hey, it'll certainly provide some liquidity. which we're going to need for Tesla. Rumor number 4, Tesla will be included with one date falling in this quarter, quarter 4, and then the second half of Tesla will be included in quarter 1 of 2021. We'll know the answer tomorrow evening, I suppose, as to what will be decided. But once we have this answer, it would be very reasonable for you to mark that information on your calendar, subscribe to this channel. I'm sure I'll make a video on it and I'll let you know all about it. But this is where the fun part comes in. What do we do once we have those dates? Okay, well, let's go ahead and pull up a few screenshots here. Y'all remember back when the Cybertruck was revealed? The Cybertruck was revealed on November 21st, 2019. The stock market went up, and the Cybertruck was revealed, and then the market sold off pretty substantially. The market initially did not like the Cybertruck for a solid 8 days. The market was very, very disappointed in the Cybertruck. So that was in 2019. We had a run-up of high expectations for a new Tesla reveal, and then a sell-off for about a week-ish when the Cybertruck was actually revealed. So, in other words, the market bought the rumors and sold the news. Buy the rumor, sell the news. Very common trading thing. Then, Tesla announced its stock split in August, and announced it for August 31st, 2020. And leading up to the stock split and through the day of the stock split, Tesla hit a peak closing price of $498.32. And as soon as the split was over, the stock fell 34% over the next 8 days. Like literally a huge plummet. Now, this could have also in part been, the wearing off of enthusiasm for the stock split, which I warned about on this channel. I said on this channel, it's gonna fall after the stock split, and that's exactly what happened. All the hype went away, the hype blanket got pulled out, then Tesla decided to sell shares on top of that and raise money. Poop! That was all we needed, the little prick that popped the bubble, and that led to a pretty painful month for tech stocks in September. It's almost like you could blame Tesla for everything bad that happened in September. But yeah, anyway. Now that's kind of all a little blip on the radar, given that now Tesla's trading around $600 per share post-split. But what happened just 3 weeks later? Well, Tesla's battery day. And what did we have? Well, we had the same thing we had with the Cybertruck event and the stock split event. Price shot up, and battery day came, hype, and as soon as battery day was over, the stock fell, and fell 15.5%. Which is really sad because what was revealed on Battery Day was absolutely groundbreaking and revolutionary. I broke that down many times on this channel. In fact, you could just look at my stock playlist or even my Tesla playlist. They're kind of mixed and matched in there. And you can see all my videos on Tesla and stocks in case you want to get by the other things. Just look at the Tesla and stock playlist. But anyway, this is kind of the history that happens at Tesla. You get buy the rumor, sell the news over and over and over again. So, what are we going to do now that, well, tomorrow we'll have the dates for S&P 500 inclusion? Well, we should probably expect the same darn thing to happen. Now, no guarantees because we can never know. Who knows? Maybe the market wised up and is prepping for exactly what we're describing here. Probably not. It's probably going to be exactly the same thing, but who knows? We don't really know. But what we do know is it wouldn't be shocking. In fact, it would align with history that after the S&P inclusion of Tesla is absolutely complete, all of the day traders and swing traders get out of Tesla stock and go on to the next trending stock on Robinhood, and we'll see Tesla pull back substantially. It wouldn't be a surprise to see Tesla fall under $500 per share again. However, keep this in mind. The past does not necessarily predict the future, so it is possible that that does not happen. Now, my belief is if Tesla does drop substantially, we'll probably have between 3 to 7 days to go buying for Tesla stock. And then it might slowly start trending up again. Now, that's not always true either, though, because after September, Tesla traded sideways pretty much for 3 months. So that's entirely possible as well. But I don't mind if we get a nice pullback after this S&P 500 inclusion, buying on some of the big dips that are hopefully going to come so I can get into Tesla a little bit cheaper. It's a little pricey where it is right now, and I'd like to pick it up a little cheaper. So, what did we learn here? Well, we learned a crap load of stuff about Tesla and China. the Silicon Valley of China revolution, and we learned that there's probably going to be a pullback after the stock inclusion of Tesla into the S&P 500. However, this should just represent a buying opportunity. Tesla's here to stay, and I still believe it when I say it. Tesla's at the beginning of their exponential growth curve. Folks, if you want more insights like this, make sure to check out the amazing programs linked down below. Email me personally at kevin@meetkevin.com for a bundle code. I personally answer. I don't have any staff, so it'll be me that replies. Sometimes that means it takes me a little longer because a lot of y'all want to pick up these bundle codes, especially now that it's Black Friday weekend. But yeah, there you have all the details that I've got about Tesla. Thank you so much for watching, and folks, we'll see you in the next one.